This self-learning video is created by Jagrat Creation. It is on liquidation of companies. I wish to solve one sum on this chapter, liquidation of companies. Observe the sum that I intend to solve. This is the sum which I wish to solve here before you. Chandni Limited went into voluntary liquidation on 30th June 2016. Balance sheet as on that date was as under: assets, liabilities, 5,000 equity shares, 100 is 50 per, paid up per share, so 50% is the 50% of the face value is being paid up. 6,000 equity shares, 50, 30 paid up, so 60% of the face value is paid up. Equity share of 10 is 6 each, 6 paid up, 60% paid up. Preference share, debentures, bank loan, secured on machinery. Machinery realized value is 2,80,000. Bank loan is 50,000, so they are fully secured creditors. Creditors 2,47,960. Calls received in advance on equity shares 10,000. Now assets realized: land and building, machinery, investment, data, stock, goodwill and patents were found useless, so no value realized for that. Liquidation expenses amounted to 6,350. Liquidator is entitled to get a remuneration of 2% of the amount realized from the assets and 3% of the amount paid to unsecured creditors except preferential creditors. So we are not required to pay liquidators remuneration for payment made to preferential creditors. Only unsecured creditors are to be considered. Creditors include provident fund, director salary, salary of employees for holidays, outstanding audit fees, salary of 2 employees for 5 months at 250 per month, premium on employees insurance scheme. Debenture holders are paid on 31st of March 2017. Liquidation is on 30th June. Debentures are paid on 31st of March, so 9 months after the date of liquidation they are being paid. So should we pay them 9 months interest or not? That will be explained to you while solving the sum. We are required to prepare liquidator's final statement of receipts and payment. Now, winding up is a process by which the artificial personality of a company is brought to an end. For that purpose, the person appointed is known as liquidator. The job of liquidator is to assume all the assets, realize them, and apply the proceeds for the payment of claims against the company, but the claims have to be paid as prescribed by the law. What is the sequence in which the claims are required to be paid? Understand one thing. You are required to pay first of all fully secured creditors. Then liquidation expenses and liquidators remuneration are to be paid. Then preferential creditors, creditors who are given priority for payment as against unsecured creditors as per law are known as preferential creditors. So then you have to pay preferential creditors, then pay debenture holders who holds the floating charge over the assets of the company, then pay unsecured creditors, then preferential capital. After preferential capital, you have to pay this calls in advance, calls received in advance. Then if the surplus cash is left, distribute that cash amongst the various type of equity shareholders pari passu, so that the loss sustained by all the kinds of equity share is uniform. This is the way in which we are required to prepare liquidator statement. Let me start with that. So this is a liquidator statement. This is the details of balance sheet that I have already demonstrated. First of all, opening cash balance will be recorded 11,000. Next step, write the realized value of assets. Land and building realized 3 lakhs. Plant and machinery 2,80,000. But remember, bank loan has a charge over the proceeds of 2,80,000. Then investment 1,40,000. Debtors, stock. This is the total value realized for assets 8,32,000. First payment is to be made to fully secured creditors out of the proceeds of machinery. First payment is to be made to this bank loan, they are fully secured creditors because the claim is 50,000 and the proceeds of asset is more than 50,000. So they are fully secured. So fully secured creditors are paid. Then liquidation expenses and liquidators remuneration is to be paid. So this is the details given to in the sum about liquidation expenses and liquidators remuneration. So liquidation expenses amounted to 6350. Liquidators remuneration 2% of the amount realized for assets. So 8,32,000 into 2% is the remuneration. Then 3% of the amount paid to unsecured creditors. So 3% of unsecured creditors. Yet I have not paid any amount to unsecured creditors, so I can't calculate the remuneration of a liquidator based on payment of unsecured creditors. The moment I will pay, I'll calculate 3%. Next payment, that is of preferential creditors. It is very important to work out the working note for preferential creditors. So these are the various creditors. Out of them, how many are preferential and which creditors are to be treated as unsecured creditors? It is a very important point considered in this sum. So I prepare here one working note for that. So first is Provident Fund 3460. Now is Provident Fund retirement benefit payable to the employee by way of Provident Fund? Is it preferential? Then observe the provision about preferential creditors. All sums due to employee from Provident Fund, Pension Fund, Gratuity Fund or other fund maintained for the welfare of employees is treated as preferential. So this 3460 is a preferential creditors. That's an important point to be understood. Next, director's salary. Now, director's salary is paid to managing director. Director's fees for attending the meetings is different. Here is the word salary, so it is managing director's salary. Managing director is not treated as an employee because his status is special and distinct as compared to other employees. So, director's salary cannot be treated as preferential creditor. So, director's salary 3,000. Please read this observation. For the purpose of Section 531B, Companies Act 56, employees shall include officers and other administrative staff members, but it shall not include workmen and managing director. Here, director's salary, so it's a managing director. In fact, Section 538BB clearly states that the express employee does not include workmen. Also, Section 226 read with the explanation of 269 includes that the managing director is not an ordinary employee, hence he should not be considered as an employee for the purpose of Section 530. So this director's salary is to be treated as unsecured creditors. So it is treated as unsecured creditors. Next is salary of an employee for holidays, 2,500. Now observe the provision. All accrued holiday remuneration becoming payable to an employee on account of winding up is preferential. It is treated as preferential. So this payment is to be made in priority to the unsecured creditors. That is the meaning of preferential creditors. Who has given this preference to these creditors? The company law has given the preference to these creditors. That is, they are given prior payment rights as compared to unsecured creditors. So this is also treated as preferential. So 2,500 is preferential. Outstanding audit fee. Audit fee for that there is no such provision that the audit fee should be considered as preferential. So it is treated by default unsecured creditors. Audit fee unsecured creditors. Then salary of 2 employees for 5 months, 250 per month. So 2 employees, 250 per month, 5 employees. So 2,500. Now what is the provision? The provision is all wages and salaries of the employee due for a period not exceeding 4 months within 12 months next before the commencement of the winding. So winding up has commenced on 30th June. So from 30th June 2015 to 30th June 2016, that is next 12 months before the winding up. In that 12 months, 4 months salary is to be considered. But 4 months salary should not exceed the limit of 20,000. So here 2 employees are there, so employees 2. 4 months salary is considered to be preferential, but the 4 months salary should not exceed 20,000. So here preferential amount is 2 employees, 250 per month, 4 months salary 2,000. 2,000 is not exceeding 20,000, so 2,000 is considered as preferential. So out of this 2,500, 2,000 is preferential, 500 is unsecured. So 2,000 preferential, 500 unsecured. Then premium of employees scheme, ESI. Unless the company is being wound up voluntarily for reconstruction or amalgamation, all amounts due in respect of contributions payable during 12 months previous the winding up of a company as an employee person under the Employee State Insurance Act or any other law for the time being in force. So this is also considered as a preferential creditor, presuming that it has become due within 12 months prior to the commencement of winding up. So this amount is due within 12 months. It is a presumption. So this 5,000 is also considered as preferential. Now see, creditors includes following. So all these liabilities are included in the creditors mentioned. Creditors mentioned are 2,47,960. So let me write down 2,47,960 total creditors over here. From that I have considered that 18,460 are considered. Out of that, how much is preferential and how much is unsecured? What are the remaining creditors? So 2,47,960 minus 18,460 are the other creditors, and for them nothing is told, so they are always unsecured creditors. You are not given any information about their right of prior payment as per law. You are not given any information about any security given to them, so they are always treated as unsecured creditors. So they are recorded in the list of unsecured creditors. Now let me have a total number of preferential creditors are 12,960, and these are the total unsecured creditors. Now after liquidator's remuneration, I am required to make a payment to preferential creditors. So 12,960 paid to preferential creditors. After preferential creditors, I am required to pay debenture holders. So debentures are 2,50,000. They are paid on 31/3/2017. So should I pay them 9 months interest? Let us consider this point. So debentures 2,50,000 I write in the inner column. And whether the 9 months interest should I pay or not, that depends upon, do I have sufficient funds to pay the unsecured creditors? If I have got funds left for unsecured creditors, then additional interest for debenture to additional interest of 9 months can be paid to the debenture holders. So let me work out the cash balance. So this is the total cash receipts. These are the total payments 1, 2, 3, 4 and 5. It's total, if you work out, 3,35,950. Now this is the cash balance available, 5,07,250. Debentures are already considered in it. Only interest is to be paid, is to be decided, 5,07,050. Unsecured creditors are 2,35,000. So I have got sufficient funds to pay unsecured creditors. Now I should pay 9 months interest to the debenture holders. So unsecured creditors 2,35,000 could be comfortably paid from 5,07,000 rupees. So now I can pay debenture interest for 9 months. But moment I pay unsecured creditors, I am required to pay remuneration to the liquidator. So 2,35,000 into 3%, liquidator's remuneration payable is 7,050. Now 2,35,000 and 7,050 is the additional payment made by me. But now I can pay interest for 9 months because I have got sufficient funds to pay the unsecured creditors and even the remuneration thereon to the liquidator. So now I have got this much of cash balance. So after payment of unsecured creditors, still the cash balance is left. At the rate of 3%, the remuneration to the liquidator has also been paid, and I have got a cash balance. So now I can pay debenture interest for 9 months, 15,000. So this is the total payment to debenture holder. This is how, should I pay interest to the debenture holders or not? It is being worked out and explained in this fashion. Next, I am required to pay the preference shareholders. 1 lakh rupees are paid to preference shareholders. Now, how much is the cash balance left with me? I have paid 1,15,000 debenture interest. So now let me work out the cash balance. After preference shareholders, I am required to pay calls received in advance. They are paid after calls are received in advance from the equity shareholders. I have got three types of equity shareholders, 1, 2 and 3. Who has paid me calls in advance that I am not given? I don't know that. So I pay calls in advance that has been received back after making payment to the preference shareholders. So if I make a payment of these calls in advance, I can demand the unpaid amount on each share from any category of these shareholders. This is a very important point. Calls received in advance, I am not given the information about these calls have been received in advance from which category of shareholders, that is not given to me. So I want to pay them after making payment to preference shareholders. So 1,10,000 and 15,000. So these three payments are made. So in light of that, my cash balance will change. So 5,78,000 plus 15,000 plus 1,25,000 is to be added. So 7,03,000. Now I have got a cash balance of 1,40,000. This is the cash balance available to me for making payment to equity shareholders. There are three types of equity shareholders. A, 100 is 50 paid up. B, 50, 30 paid up. C, 10 is 6 paid up. So all the three types of equity shareholders have got different face value, different paid up value. In such circumstances, it is my advice to prepare a memoranda cash account. In this memoranda cash account, I will write down this cash balance. I will demand notionally last call on all the types of shareholders. So all the shares will be fully paid up, 100% paid up. Out of this total cash balance available, I will find out the refund per 1 rupee of share capital. On the basis of this refund of per 1 rupee of share capital, I will multiply that refund rate per rupee with the face value of the shares. So I will get the refund to be made to each type of equity share. On the basis of notional demand and notional payment, I can work out the actual demand and the actual payment to these shareholders. Let me prepare this working note and explain to you once again. So opening cash balance recorded in memoranda cash account. This is not actually I receive cash and I pay cash. It is notionally hypothetical receipt and hypothetical payment. And on the basis of this working, I work out, I calculate the actual cash receipts and payment. That's an important point to be understood. So let me demand the last call. 5,000, A type of equity shares, 100 is 50 per share paid up. So share of 100, 50 paid up. I can demand the last call of 50. On how many shares? 5,000 shares. So on 5,000 shares at 50 rupees, 2,50,000 is the notionally demanded, actually not notionally demanded. Similarly on B type of shares, share of 50, 30 per share paid up, so I can demand 20, 60,000, 6,000 into 20. This is the amount that I could demand. On C type of share of 10, 6 paid, so 4 rupees can be divided on 15,000 shares. So this is the amount that I can have by demanding last call from all the type of shareholders, and by this notional last calls, all the shares are 100% fully paid up. So this is the cash available. Now 5,60,000 is the total cash available after demanding all these notional calls. Now let me find out the total share capital if the shares are fully paid up. So total share capital now paid up on the basis of these notional calls. Let me work out the total paid up capital. So notional paid up capital, 5,000 into 100 each, 6,000 into 50 each, 15,000 into 10 each. This is the total notional paid up capital, 9,50,000. On this 9 lakh share capital, I have got 5,70,000 available for distribution. So 5,70,000 rupees are to be distributed on a paid up capital in terms of rupees 9,50,000. How much is the refund per rupee of capital? So let me work out the refund per rupee, 5,70,000 divided by 9,50,000. So refund per rupee works out to be 60 naya paisa. So 60 naya paisa per rupee is to be refunded. So if the share of 100 per rupee 60 naya paisa are to be refunded, so 60 rupees are refundable on A type of equity share. Share of 50 each, face value 50 each, 60 naya paisa per rupee is refundable. So 30 rupees per share. 10 is the face value, 60, so 6 rupees is refundable. Now let me go on refunding. Notional refund, not actual refund, notional refund, hypothetical refund. So 5,000 into 60, 3 lakhs. 6,000 into 30, 18 lakhs. And 15,000 into 6, this is the refund. Now what is the notional demand, hypothetical demand? Hypothetical demand is 2,50,000, refund 3 lakhs. Now understand. This share of 100 each, 50 per share paid up. So they have paid 50% of the face value. The refund is 60% of the face value. As they have paid 50% and 60% of the face value is the refund, they are entitled to have 10% refund. So on share of 5,000 shares of rupees 100 each, 5 lakhs, 10% is refundable. So 50,000 is refundable. Other way, 2,50,000 is the demand and 3 lakhs is the refund. So refund minus 2,50,000 notional demand, 50,000 could be paid to them. So A category is paid 50,000. Here 20 rupees is demanded and 30 paid. 20 rupees is demanded and 30 paid. So what has happened? 180 minus 120, 60,000 rupees are payable to B. C. On these shares, this is a hypothetical demand, this is a hypothetical refund. Similarly, 60,000 demanded and 90,000 is paid. So 90,000 minus 60,000. So this is the amount to be paid. So what is the amount paid? 50,000, 60,000 and 30. 50, 60, 30. 1,40,000. I have a balance of 1,40,000. This is how 1,40,000 rupees are refunded. But to whom, how much amount is to be given? For that, I have prepared this memoranda cash account and worked out the amount to be refunded to A, B and C categories of shareholders. Now after recording this refund, I can have a total of receipts and payment. The total on both the sides should agree. Look at the total on both the sides. 8,43,000. 8,43,000 is the total. This is how the liquidator's final statement of receipts and payment could be prepared. I have tried to explain you this sum. I feel that you have followed all these things. Thanks to all.